Hey, Ryan Andrews here at the world headquarters for Hiatus Homes. We just got some data released this morning on the Bend housing market, and I wanted to share a couple things on that, a couple things that we predicted, and a little bit of good news. So stick with me for a minute, and we'll get into it. Okay, so this data comes from the Beacon report through the end of November. So just a couple of quick highlights. Number one, we saw the median home price pop up a little bit from 680 to 696. We were at 680. We were about the same as it was a year ago, basically like November through January of last year. Then we saw kind of a big pop right as the Fed announced that it was going to start raising interest rates. I think people pulled the trigger on buying homes to kind of try and lock their mortgages in before rates went up. So we saw kind of a surge March and April. Then it came down fairly significantly as interest rates went up super high. We'll talk about interest rates in just a second, but some interesting news, seeing the home prices strengthen just a little bit, median home price strengthen. We'll explain that a little bit more. As far as number of sales, that came way down. So it's interesting, price went up. Number of sales is down pretty low to our seasonally low average, January, February, but that's a lot lower than November normally is, the last couple of years. It's definitely affected the housing market, certainly a softening. Days on market for sold properties dropped again back down to 18 from 28. Just seeing a little relief there for sellers. All these numbers are so low. We're obviously in a seller's market still. A lot of times, it's seeing days on market into like the 90 range. That is where we see it become a buyer's market. Okay, so for building permits, as a builder developer, we care about this one a lot. Building permits are down. You can see on the right-hand side of the chart, everything is way down the last 4 or 5 months, just trending down even more, only 24 building permits. The way we interpret that is there's going to be a lack of supply 4 to 6 months from now, because the homes that would be started now are not starting. And so those are the homes that would be ready for the spring selling season. They're not going to be there. So we think that actually points to prices either holding or going up this spring, because there's not going to be new inventory. This is one of the reasons we are trying to build through right now. We've slowed down, but we're not pausing completely. We're trying to build through because we want inventory to sell this next spring. Okay, this is a really interesting one. Cash transactions popped up from 38 to 55. And mortgages dropped way down from 117 to 72. So very little is getting done with the mortgage. But as I predicted this summer in one of our investor letters, the all cash buyers would provide a little bit of support to the Bend pricing market, that they were going to move in as they found deals, as prices kind of came off their peaks. The cash buyers come in and they scoop up those deals, and that supports pricing in the market a little bit. The last 4 months we'd seen cash transactions go down a little bit, and I'm scratching my head thinking, where are you guys? And then we saw this month they popped up. So they're obviously still here, still transacting in Bend. And then month supply ticked down just a little bit. I think, I would guess, this is total speculation here. I would guess that a lot of sellers that had put their homes on the market a couple of months ago didn't get interest at the price that they wanted and pulled them off. So I think that's maybe one of the reasons we saw supply come off just a little bit. So anyhow, then it kind of gets into Redmond. Redmond is not quite the same picture. Redmond is still softening further, but it appears that, at least for the moment, Bend has a little bit of support in its housing market. So one other quick thing I wanted to show. So one of the reasons for this, I think that we're seeing, here's a chart right here. This shows the mortgage rates over the last year. So you can see they went all the way up to about 7.25%. Where they topped out in October and November, kind of late October through November. Then they started to come down. Now they're down about 75 basis points from their peak for 30-year fixed, to about a 6.5. And so what I think that means is that the mortgage market overreacted a little bit to the Fed's language, and that now that the Fed's language has softened some, even though rates are technically going up as far as the federal funds rate, mortgage rates are coming down because they baked in higher price increases or higher expectations of the Fed's tightening policy. And so maybe those are starting to adjust a little bit. That would be good as we get into 2023. As a home builder, we'd love to see mortgage rates come down a little bit. It certainly hammers the affordability of homes when mortgages are at 6.5. Okay, that's all I got. Thanks for watching. This again is Ryan Andrews with Hiatus Homes. If you want to learn more about us, we're at hiatushomes.com.